Ladies and gentlemen, good day, and welcome to Linc Limited's Q3 FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head, Institutional Equities at FY2025 Securities Limited. Thank you, and over to Mr. Agarwal.
Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Linc Ltd and FY2025 Securities to this financial results conference call. We have with us Mr. Rohit Deepak Jalan, Executive Director, Mr. N.K. Dujari, Director of Finance and CFO, and Mr. Sanjeev Sancheti from Uterus Advisors LLP, the company's IR advisors. We'll have the opening remarks by the management, followed by a Q&A session. Thank you, and over to you, Mr. Jalan.
Thank you.
Yeah, you can continue.
Thank you. Thank you, Naveen. Good afternoon, and thank you for joining us for Linc Limited's Quarter 3 FY2026 investor call. The third quarter of this year played out in a mixed operating environment marked by modest top-line growth and continued margin pressures. Operating income for the quarter stood at 129.29 crores, registering a year-on-year growth of 5.8%. Over the last few quarters, our growth has been measured rather than aggressive, but this has been a conscious choice. Our focus has been on strengthening the product portfolio and building long-term growth drivers rather than chasing short-term expansion. Encouragingly, several new products launched recently are witnessing positive early traction, and we expect their contribution to scale up progressively as distribution expands. Our innovation pipeline remains active, and we continue to invest in brand relevance, distribution reach, and category expansion, which we believe will support sustainable growth over the medium term. On the strategic front, our international initiatives and joint ventures are progressing steadily and are at various stages of maturity. The joint venture with Mitsubishi Pencil Company, Japan, remains operationally stable, and the recently launched product has received an encouraging response from the market. Joint venture with our Turkish partner, operations have commenced and remain stable with a gradual transition towards automation. The order book for 2026 looks quite promising. Subsidiary with Morris, Korea, this venture remains linked to our upcoming Bengal manufacturing facility, which is slightly behind schedule and is now expected to become operational by Q1 of FY2027. Kenya subsidiary, the sales momentum has begun to pick up, and we expect this positive trend to strengthen further in the coming periods. Linc subsidiary, business operations have commenced, and this venture is expected to gain more meaningful traction from the coming financial year. The joint ventures continue to remain in the investment phase, although we are encouraged by the fact that losses have moderated as initial scale-up and market development costs begin to stabilize. While the ramp-up across certain initiatives has taken longer than initially anticipated, we believe the foundation being laid is both deliberate and necessary. The benefits of an improved product mix, operational efficiencies, and strategic partnerships are expected to become more visible as volumes scale and investments mature. In summary, despite near-term pressures, we remain confident in the long-term value creation potential of our strategy and believe that the steps taken over the past few quarters position Linc Limited for stronger and more sustainable performance going forward. With that, I will now hand over to Mr. Pujari for the financial update.
I appreciate your presence at Q3 FY26 earnings call of Linc Limited. In Q3 FY26, our operating income stood at 129.29 crores, marking a 5.8% YOY growth. Operating EBITDA for Q3 FY26 stood at 12.9 crore with a margin of 10%. Operating performance was impacted by a one-time increase in employee benefit expenses arising from recent changes in labor regulations. Excluding this non-recurring impact, operating EBITDA margin would have been approximately 10.7%. PAT for the quarter stood at 6.77 crore, translating into a margin of 5.2%, representing a year-on-year contraction of around 191 basis points. This was primarily due to lower operating margin and losses from joint venture amounting to 83 lakhs. During the quarter, we generated 33.81 crores of cash flow from operations and closed the period with a net free cash position of 10.14 crores, reflecting continued financial discipline. Asset productivity remained healthy and fixed asset turnover at 4.05x, indicating efficient utilization of asset base. The cash conversion cycle improved from 63 days in FY25 to 61 days as of 31st December 2025. With that, now I open the floor for question and answers.
Thank you very much. We will now begin with the question and answer session. Each participant is requested to limit himself or herself to a maximum of 2 questions. Time permitting, we shall reward for any further questions that you may have that remain unanswered. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Rakesh from Nine Diverse Capital. Please go ahead.
Hi team, thank you for the opportunity. Sir, there is a slight change in the PPT this time compared to the past. So it will be great if you can help me with a few data points. So first of all, what was the total volume of the pens for this quarter?
Okay. Volume for the quarter was 16.4 crores.
Okay. 16.4 crores. Okay. So that, just a second. That is, okay. And for the Pentonic brand?
Pentonic, the volume was around 6.5.
Okay. So sir, so volume growth compared to last year is 20%?
Yeah, for writing instrument, there's a volume growth.
But is it 20%? Because last time it was given 136.7 billion, now it is 166.
That region only.
Okay. But the sales growth is only 4%. Any reason for that?
Because of the change in the product mix.
And so realization would have come down drastically?
Yes, a little bit, yeah. For Linc.
Okay. For Linc. So what will be the realization for this quarter?
Linc will be around 5 rupees.
Okay.
Pentonic will be in the same range.
Okay. So earlier, last quarter, it was 6.3, now it has come to 5. So the reason, is it because of the competition, new competition coming in the market in the same price range that has led to a decline in the ASP?
No, there is not. That is not the reason, I believe. The reason is because of the change in the product mix. We have launched few product. We have focused on the below 5 rupees segment also. There is no price decrease which we have taken. There is a change in the composition of the product mix.
Okay. In the total business, what will be the revenue share from the export for the quarter?
Export share is more or less same. There is no major change. It is to 20%, around 20%.
Okay. 20% of the revenue has come from export. So just wanted to ask you one question. From the last few quarters, we are talking about increase in business from the export, but I don't think it is like increasing, because if you see last 2-3 years, the revenue from the export is around 100 crore. And this, if I look at the current rate also, it will be around 100 crore only for this year. Any reason for export slowdown?
I think Rohit will take this question. I request Rohit to take this question, but more or less I can tell you this much, that there has been growth in certain markets, but overall figure has not. You are right. Overall figure has not gone up, but within that figure, we had very good performance from few of the geographies. Rohit, can you take this question?
Yeah. So, there has been, uncertainty in certain markets, and that was, slightly the reason. But if we look at, our exports to, East Africa, basically that has, dropped because of the Kenya subsidiary. And from the Kenya subsidiary, there has been encouraging response for exports in that region.
Okay. That is the only reason?
Yeah, and like I said, uncertainty. So we've opened, quite a few markets, and they are of course in the very initial stages of, partnership. So, in export markets, it takes, slightly, longer to build and develop those markets, because the feet on street, the sales team are purely, at our distributors, disposal.
Okay. That was helpful. With respect to the new products that we have launched, like markers, anything, how's the response and what is the revenue from those products?
So the response from, the marker category has been, encouraging. We have actually not yet launched across, the country. And we are there in 2 or 3 zones out of the 5 domestic zones. The exact share of marker category, I don't have it, handy, but we can get back to you with this number.
Okay. And the reason for not launching the pan-India product is because of the manufacturing issue, or manufacturing, or is it because you want to go slow one by one reason?
So actually, we with every investment we make, there is a capacity, right? If we launch, pan India, and if we feel that, the capacity we have right now is not, enough for the entire, country. So that's why we are gradually, scaling up our capacity, and also we are opening new markets as we move forward.
Okay. One last question from my side. Looking into the average realization coming down in the Linc brand, so the margins have been impacted. They are, if we adjust one-time impact, they are around 10.7 to 11. So can we say these margins will be maintained, or there will be under further pressure on these margins?
So since we started, in the mass price segment, we had, created some space, and we had started focusing on the 10 rupee and the above price segments. So we realized that it is a big chunk of the market size, and we've introduced few products at the 5 rupee MRP price segment, and with increasing numbers in that price segment, of course the ASP is expected to drop slightly. However, with balanced approach, and since our future strategy is highly towards higher price segments, so over a period of time with the balance, it should improve.
Okay. That was from my side. Thank you very much, and all the best. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and 1 to ask the question. We will wait for a few moments before handing over the call to Mr. Dujari for his closing remarks. A reminder to all the participants, you may press star and 1 to ask the question. As there are no more questions, I'll now hand the conference over to Mr. Dujari for closing comments.
Thank you everyone for joining the investor call of Linc Ltd. We see future with some. We hope to get some better performance in future quarters. Thank you.
Thank you very much.
Thank you.
Thank you.
Thank you.
On behalf of SKP Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.